I'm going to post these links after this video, but it's primarily off the silverinstitute.org and the goldmoney.com. But it brings out some interesting facts. Some of these are from before, but this is from August. But again, it's forecasting things for November too. India and China account for 52% of global gold demand, and one of the reasons is because China and India continue to be the world's largest buyers of gold. Both of these countries are experiencing rapid increases in prices, something which is causing investors to buy gold and silver, despite what the policies of the Chinese banks are doing, raising interest rates. It's not. I'm sure it's slowing down inflation, but we also have to look at China imports inflation from the United States, and so as long as their currency is pegged to the dollar, they're going to have inflation. So that's a given. So their investor demand is going to go up more and more and more. India imports gold, and it could reach 950 to 1,000 tons this year. So that's just that's not their total usage. That's just what they're importing. So they're very much heavily investing in gold. Rising Indian gold imports are likely to offer sustainable support for the yellow metal's future price development, blah, 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 right? Another thing, they're talking about the actual prices going up, but it says it's expected to hit up to record levels of for imports 1,000 tons in 2011 just for India. So that's some of these things might come on a lot stronger towards these last 2 months of the year too. Some of the things we've experienced with the pullback in September was due to the margin rate hikes and other things going on with the euro, where they run to the dollar as a safe haven. Illogical as it sounds, but not everybody's running to the dollar as a safe haven. As we can see, that's not what's really going on in China and India. That's primarily going on with European investors and things like that. This is from the Silver Institute. I thought this was a pretty good chart. I'll try to blow this up a little more. It's talking, it doesn't have 2011 in it. It's 2010, and 2011 investment is up a great deal. Besides, but where the really demand for silver is coming on strong is in the coins and in the investment. The industrial applications, they were down in 2009, but they increased in 2010. I don't know what they are in 2011, but I do know the coins and investment is much higher this year. So overall demand is going up. Now, you look at the major countries that are producers. It's Mexico, Peru, China, Australia, Chile, Bolivia. United States is number 7. United States is actually a significant producer. And China is 2.5 times what the United States is. Okay, so they're a very big producer also. But I want to point out something about this. We just saw the demand go up, and we know the demand is even higher than that chart is, because that chart showed 2010. Silver mining output is falling. So this is a chart. This is Peru, which is the second largest silver producer. These are the output changes for these particular months. And I know this is slightly old data, but figure the trend is going on. It's the same kind of trend that's happening as before. And I'll try to make this chart bigger here in the corner, which shows what's going on. This is Peru, okay? So you look in 2009, it looks like they had a peak of production, 2010, and it's fallen off for 2011. Besides, it's been falling off since the end of 2008, actually. So we're getting much higher demand and much less output. And that might be because of the quality of the ore. Same thing that's going on in Chile. They're going to report lower figures in 2011. Bolivia, same thing. U.S., which is the world's seventh largest silver producer, is perhaps falling the hardest. So this is leading back to an article I think I saw before about peak silver, peak oil, same deal. I mean, it's not coming on overnight, but it's a trend that's going to be occurring piece by piece, year by year. China, they think, will be mining more silver. However, they have an 3,405 ton export quota. So that's not going to help the rest of the market. They're going to keep it for themselves. So they're going to mine their own stuff and keep it. So that's it's not going to affect the price of silver on the global market too much, because it's being held internally, and they still have the inflation, which is being caused by them linking their currency to our dollar. So we're exporting our inflation to them. As long as that continues, where they link the currencies, they're going to have more and more inflation. So they're going to be buying more and more metals. And also, India silver imports climbed 222% in May over 2010, and in the second quarter it was 200%. So overall in the second quarter, I know how they can change these figures around and just emphasize figures to their, because these are more sites are more bullish on silver and metals in general. So, but the trend is definitely there. It's definitely there. The mining is just becoming less productive in most areas of the world, and I did point out in that last video just how energy intensive a mine is for just operating cost, and also I didn't point out what the capital expenditures are, but they are huge. I mean, they're beyond what you can think of. I mean, they're way the hell up there. If you're doing a large mine, the capital expenditures are ridiculous. The equipment is not cheap at all. It requires a lot of maintenance and a hell of a lot of fuel. So, like I said, I'm repeating myself on my last video, but the energy cost in mining, I'm expecting diesel fuel to go up a lot. So, it's not going to be profitable to mine if diesel fuel goes up 50% or 200% or 100%, unless the price goes up a hell of a lot more, and that'll cause even more physical shortages, which I think these are not because of fuel prices, but because maybe the quality of ore is not as good as it was. Talking about the Mint, reported that sales of 1 ounce American Silver Eagle coins are 19% higher than last year. Actually, if we went into September, they had some huge sales when the price dropped. So same thing about silver maple leafs, which jumped 74% over 2009. Same thing with they're bringing out this one period, July 2010 and July 2011 are up 66%. But again, looking back to the demand is going up, the output's going down, and we look at the chart today. Silver's down. We'll just refresh this real quickly. If it does refresh, this is at 11:17 on November 1st. Silver's down $1, almost a 3% move. Oil's down 2.73%, down to $90. I did expect to move down in oil to about 90, but look where all the money's flowing into the U.S. dollar, and that's because of fears of the euro. Sometimes I have a little doubts about these Western markets, if they're truly reflecting the global price that's being paid everywhere in the world. I mean, because I do believe that the Eastern nations are pouring their money into this stuff. I mean, I just can't see the average Chinese person buying U.S. dollar denominated instruments, financial instruments, even if they could. So I think the best advice is still to hold on, and we might see some explosive moves here very soon. I'm wishful thinking on that too, because I hold silver, I even hold oil, I hold palladium, but looking at the fundamentals again, doesn't make sense how long this can be held back. So again, just reviewing these things about the coins that have been sold, and also about the overall investment demand, and also about what the Chinese and Indians are doing. There's more and more demand, and they have an export quota, so they're not exporting their silver. China's keeping most of it. And again, here, you know, that's about the global demand, but the quality of the mining has actually been slowing down quite a bit. Even though there's demand is up, I'm saying the stuff is not there, and that's a simple fact. It looks like we're hitting what they call peak silver, just like they talk about peak oil. I think peak silver is here.